How you doing out there? Wanted to do a video on what I call the vacuum effect here on the SPX, based on a price by volume. What we're looking at here is the SPX weekly chart going back into '07 with those highs at 1576, all the way through March lows of 666, and the recovery that we have here, and what everybody was looking at as a double top here at 1150. Just want to point out some key fib numbers. The 38% retracement of that move from '07 to the lows of March of '09 are sitting at 1121. That also happens to just coincide with the price by volume here, that pretty low area where it just begins. The 61% fib is at 1228. It's also lining up pretty close to the 200 period moving average, which right now is sitting at 1226. We did break a downtrend line. We did that back in December. We got above the downtrend line. We broke into what I call the vacuum. And basically the theory behind the vacuum effect is there's no price by volume here, which relates into not a whole lot of resistance. It explains a lot of the recent move, how we broke that record of 12, 13 days in a row with the SPX green. It did not really surprise me. Going back a little bit, when we first poked into this area, the 1140s, 1150s, I was looking for the correction back then. We did get it. We pulled back down into the 100-day moving average, and it's just been a rocket ship ride up. A lot of people were looking at shorting the 1150 area as a potential double top. We wound up getting almost to 1170. Basically, we are in this vacuum. It's tough to say right now exactly where we're going to be here very short term. The market is a little overbought. It's a little tired. The McKellen's come all the way back down. It's worked off the overbought areas. Pretty much as long as we hold this 1121 area, which I fully expect we will, we are still in a very powerful uptrend. And we've got volume on the rise recently, bullish MACD cross on the horizon on the weekly. Stochastics still look really good. On balance volume just got across to the north. And basically, get this set up right here. We're in this vacuum. We're in an area of little resistance. We're going to be able to see this market continue to melt up. I do expect to see, as I said about 2 weeks ago, we're going to see the 1175 to 1190 area before we lose 1100 again. And I still think that, even though we had that powerful move up to 1170, I'd like to see some sideways consolidation here. Maybe a little bit of bouncing around. I expect the range to continue to be tight, which it has been, and then get another leg up and start heading higher. The vacuum stops at about 1195. It's where we'll have some volume coming in on the resistance side, and ultimately my target here for 2010 is 1228. It's been my target for quite some time. It's that 61% fib number, and I do believe we can even go higher than that. Looking at 1228 to 1250. And RSI, just to point it out, is supporting the breakout area. RSI up here at 65. It's still very, very strong. And just one thing to be very, very, don't forget this. We've had a very powerful ride, 14 days, in a row where we were up. Again, this is a weekly chart we're looking at. And we had a very slightly red day last Thursday. And Friday, there was a lot of selling on quad witching for options expiration. Volume was on the rise as well on Friday. Just got to point it out that 2 days most certainly does not make a trend. If that were the case, we're going a lot higher because 14 days were green. So that's pretty much. I just wanted to do a quick video about that, about the vacuum effect. Had a lot of members request it. What's basically the theory behind that, and it's basically no price by volume, no resistance in this area, and fully expected this second time. I did not expect to stop at 1150. I felt as though the vacuum cleaner effect would suck us right